USN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back on the Financial Survival Network. I'm Kerry Lutz. We are pleased to have Ned Schmidt back with us. You know him well. He publishes the Value View Gold Report and the Agri-Food Value View. Ned's got over 40 years experience in investment management, consulting, and teaching finance in the U.S. and offshore. And what can you say about him? In 2003, he published a report, $1,265 Gold, which is one of the earliest major research reports documenting the impending rise of gold and silver at the time. And I think he summed it up best. When the Russians are shooting down helicopters in Eastern Europe, you buy gold and food and oil, not Facebook, Google, and certainly not Twitter. Ned, welcome back.
Hi, how are you doing today?
All right. So things are heating up pretty well there. They keep saying that the situation is under control. Our Secretary of State, John F. Kerry, he's got it all taken care of, but it sure doesn't look like it, does it?
No, it doesn't. I mean, this situation in Eastern Europe is still, Putin is still in charge, and our government is just basically totally unable to deal with him. And the world is far more nervous about what Putin is doing than perhaps that we are in this country. The fears of not what he'll necessarily do today, and it's almost a decent bet that Russian troops will invade eastern Ukraine before the year is over, probably before 4th of July. And when the world starts to shift to a higher risk situation, it is commodities that respond, and they have responded. So far this year, gold is up over 8%. Over 8%. Agricultural commodities are up almost 14%, and oil is up almost 6%. Of course, we know what's going on in the stock market. This fantasy of techno junk on the NASDAQ is collapsing. So it's time for investors to start reorienting themselves back to the commodity sectors, more so than they've been in probably years. The situation in agriculture is that demand continues to be strong. And if you look at the Black Sea is like a giant funnel. And you have across from the right to left, you have Georgia, Ukraine, and Romania. And those countries feed grain down through the Black Sea into Africa and the Middle East. And while we haven't had any material problems yet shipping grain out of Odessa, they're already starting to fight in Odessa with whatever these so-called pro-Russian revolters or whatever they are doing. So there's a lot of additional buying of grains, worry. The sheer demand for grains is bigger than we realize. China just finished a big study, like a 5-year study, of pollution and of their farmland, particularly with heavy metals. And the conclusion was that 20% of China's farmland is polluted with heavy metals and other nasty stuff. So their demand for grains is exceptionally strong. Soybeans are so tight that the U.S. is now importing soybeans from Brazil. And basically we're shipping Brazilian soybeans in on the east and shipping soybeans out on the west to China. And so the whole market's tightened up. And what's interesting is that hasn't yet started flowing through the companies. In other words, the company, earnings are developed with a lag, and so this improvement won't even start showing up until the first quarter results start coming in for these companies. It really won't kick in till the second quarter results come in. And so investors still have some time on these stocks. We're early in the cycle on these things. This is very early. And importantly, this movement in commodity prices is not a movement in commodities. In other words, we've had periods where funds poured money into the commodity sector willy-nilly. What's really going on is each of these three commodity sectors has different fundamentals. And it's at that fundamental level within the commodity sector that things are changing.
Right. And we've seen in the U.S. this year alone, food prices are up 20% already this year. And that's just the beginning, isn't it?
Yeah. There's not going to be any relief on meat prices this year. They probably will be flat this summer, but as soon as we start getting into the fall season again, meat prices are going to go back up some more. We're talking about beef shortage through fall of 2015. And pork has got a problem with disease that we apparently cannot remedy. PED, which is porcine epidemic diarrhea. Basically, it's 100% fatal in piglets. We're now projecting that pork production is going to be down this fall, which I don't know that that's ever happened. Which is bringing us to a sector that we didn't have before. One of the things that's been interesting about agriculture is we haven't seen many new offerings or new developments of companies. That's been a lag. We're still primarily invested in the old story, long-term stories. But the one sector that's slowly emerging and investors need to look at is animal health. It really started last year when Pfizer spun out Zoetis, that's ZTS. And we've had another one come public last month, Phibro Animal Health, which is PAHC. And then FMC is going to split up sometime in the next 9-10 months into two divisions. One will be animal health, and the other is the minerals company. And I believe they produce lithium in the minerals company. Some of your listeners may be interested in that. So we're getting this sector of animal health companies. And we've got in China, we have a big company called China Animal Health, which is 11% owned by Eli Lilly. So this sector of animal health is getting maybe our first kind of high-tech story in agriculture. So that's a sector that people need to start looking at.
And this is going to be big, obviously, because with these diseases impacting the sector, got these diseases that have to be cured and future diseases coming as well, right?
Right. And animals are more valuable. And with animal health, we can do a cost-benefit analysis. A piglet's worth X dollars, and it costs us Y dollars to vaccinate it. We can do a cost-benefit analysis on that. And so it pays for itself. The other thing is the street likes drug companies. They like companies with that high-tech cachet, even if they don't understand it or have any idea what they really do. And so it's got the potential to be very interesting.
Yeah, fascinating. So in the meantime, food prices, how much do you see them going up here, Ned? I mean, if we're in the beginning of a cycle.
Well, meat prices are probably going to rise another 10 to 15% this year. And most of that will be in the second half. But what we're seeing, importantly, is price strength across the board. In other words, I follow 16 commodities. 10 of them have positive price trends, from butter to palm oil. You just about name it. And that commodity is in a positive price trend. And again, it's not a cycle where hedge funds are coming in and forcing these prices higher. It's literally demand, and demand from China and Asia. They're exceptionally strong. Soybeans, I mentioned those earlier. The past decade was kind of the decade of corn, which was kicked off by ethanol. It looks like the next decade is going to be the decade of the soybean, because they're just simply unable to produce soybeans to satisfy demand. Corn is grown all over the world, some better than others. Soybeans are only grown in 2 bands around the world. One band runs through Iowa, Illinois, Indiana, very southern Europe, and then around to China. The southern band basically runs through Argentina and Brazil and India. Those are the only regions at the present time we can grow soybeans in, because soybeans require the sex life of a soybean requires a certain climate and weather. And it's only in those 2 bands do the soybean plants have a good sex life.
So, well, we need to know.
We got to get this around to sex somewhere. I mean, come on.
Yeah, well, sex sells, right, Ned? And more on this when we return on the Financial Survival Network.
FSN Radio.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at NoConstitutionZone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's NoConstitutionZone.com.
The Financial Survival Network. It's all about what's next.
We're back on the Financial Survival Network. We're talking to Ned Schmidt, expert on commodities and precious metals. So, Ned, all right, so soybeans, not enough of them. Can we plant more acreage, or are we kind of boxed in?
No, that's the problem. The only place we can expand acreage and is in Latin America. In the United States, there's no hidden dirt for soybeans and corn. I mean, there's no acreage that we don't know about. In Latin America, there is some, but even that's starting to be constrained, because Brazil, these stories about wild-eyed burning of the Amazon are pretty much history. Brazil doesn't tolerate that anymore. And so we just don't have the acreage. That's what the world doesn't understand, is we don't have any secret acreage to grow food on anymore. And so they're just going to have to pay up. And unfortunately, for the Western economies, the U.S. and Europe, they don't have the money. China's the one with the money. So we're going to have to compete with China for money. I mean, for food.
Right. So what other commodities are we looking at that are going to be in tight supply?
The problem is there aren't any in surplus.
Mm-hmm.
It's the way, I mean, if there was one commodity in surplus, it's cotton and maybe sugar. But sugar's got a long-term problem. None of these commodities, like palm oil, it is the most important vegetable oil in the world. People in the United States, investors in the States, have got to quit thinking that what we do in the States is what's done in the rest of the world. Palm oil is the most important vegetable oil in the world. There's only 2 countries that grow it, Indonesia and Malaysia. Everybody else is unimportant. And so this is the primary vegetable oil used in China and India. If they're going to eat more food, they're going to eat more vegetable oil, and they don't have any choice but to buy it from Indonesia and Malaysia. So we don't have anything in surplus anymore. The days of those are long gone.
Mm-hmm. So what can be done here? Are we going to have to use 3D printers and print our food here, Ned? I mean, what do we do?
Produce soybeans with a 3D printer. I hadn't thought of that. Well, what you're going to have to do is you're going to have to if you're going to feed your family over the years in the future, one, you're going to have to work harder at your job. Two, you're going to have to be a lot more careful, secure with your wealth. I mean, you can't be losing 50% in Twitters and feed your family 5 or 10 years from now. That's just not going to do it. And we're going to end up paying for these commodities in Chinese yuan anyhow. I mean, the days of pricing things in the dollars is fading quickly. There was an excellent graph on one of the websites. Market Watch had it this last week. The growth in the number of countries where China is their primary export market. 36 countries in the world. Their primarily trading partner is China. The Ukraine, oh, by the way, the Ukraine, their number 2 trading partner is China. And so they are going to dictate these prices. And so if you're going to think your dollars are going to buy food, it's just not going to happen. You've got to start shifting dollars into Chinese renminbi and start moving back into gold. The gold charts are just all developing smiley faces. And Goldman Sachs has now been wrong for almost a year. I mean, it's not anywhere close to 1,085.
Yeah, well, when I had Jim Rickards on, he said that the only people that believed that number were the research people in Goldman Sachs. The people on the floor did not believe that at all. So
what's going to be interesting, and I'll give you the 3 names here, is these stocks have been so ignored that they're developing some interesting patterns. One of the things that attracts investors is new 52-week highs. Bill O'Neill, decades ago, wrote, a company has to make a 52-week high before it's going to go higher, or something like that.
Sure.
Anyhow, the strategists on the street are going to have a real problem when some of these gold stocks start hitting new 52-week highs. And the 3 of them that your listeners might want to watch, the 2 are AU, which is Anglo Gold, and Gold, GOLD, which is Rand Gold. These are 2 stocks which could very easily make new 52-week highs this summer. They would have already done so if we had used, say, 49-week highs, because they're dropping off depth. So these 2 stocks could all of a sudden pop up on the new high list. The third one, which is a little bit behind them, is AEM.
Oh, Agnico, right.
Yes. So these are 3 gold stocks that investors need to have them on your screens and watching what's going on. Because if anything is going to make the street realize that they've been wrong on the precious metals, is when a couple of these stocks start showing up on the new high list.
Yep, I agree with you there, and that leads us to the outlook for precious metals. So, you've seen gold go under 1,300 a couple times, but not for very long, right?
No, it just. I think we're at the price levels. Well, I'm convinced we're at the price levels on silver. where physical buyers are essentially the demand. In other words, at these prices, when you break 1,300, the physical buyers are coming back. And if you look at silver, I think that apparently the $19 to $20 level is where physical demand for silver is willing to kick in. And I don't understand why it's still in that $19, $20 range. But I think its physical demand comes in at those prices. And so I think we're clearly at the bottom on those metals.
It's just been sitting there like perfectly. And then you look at that gold to silver ratio, you know, it's at 67 there. And you just say, how much longer is it going to stay at that level? That's what I look at it.
You know, if you think about silver, when a price, you know, silver went to $49 and it collapsed. When a price breaks a parabolic rise like silver did, they always come down and they form a long lateral base. And that lateral base tells us something about the strength of it when it comes out of that base. In other words, we've been in this base for silver a long time. We've made a couple false attempts to get out of it.
Yeah. But
this base at 19 to 20 is a massive base. And that means when we come out of this $19 to $20 base on silver, it's going higher. And it's going to go higher for a lot longer than people think.
Yeah.
And so,
and when it comes out, it's going to be violent too. It's going to come out violently, quickly. That's what I've been telling people. I have no idea when.
And to the upside.
Yeah.
Well, you should never wait if you wait till them ring a bell, you'll miss the game, half the game. Key to investing is when something's cheap and we don't know that it's going to go higher, but we're extremely confident. You buy it and hold it. I mean, if you think you're going to churn your portfolio in a winter every 2 weeks, you might as well go to Vegas and get free drinks.
Yeah. Any stocks, silver plays that you like out there?
I'm sorry?
Any silver plays in the stocks out there that you like?
I am overwhelmed so much in what I do. Silver stocks are not ones I can do. There's people around that do a whole lot better work than I could ever do on silver.
Yeah, well, I like your humility, Ned.
Or something.
Hey, you know, there's people that just spend, you know, like David Morgan, that just watch them all the time. And hey, stick to what you know best. That's what I say, which in my case is finding other people that know more about these things than I do, because I'm the first to admit.
And that's one of those areas where I do that too. You know, I can't dunk a basketball, and I can't follow every stock.
No, but yeah, you could just see that all these things are taking place here. You know, all these trends are happening. I just wonder how much longer they're going to be using corn to make ethanol. That's what I look at and wonder.
Well, I think the move to biodiesel and gasoline, ethanol, is a permanent move. The world, there's enough of these climate change nuts around that we're going to move in that direction, and it's part of the system now. Once something has been so embedded in an economic system for so long, you have too many vested interests, and so
it's just economically nonsensical. That's the problem.
Well, nonsensical is always relative. In other words, does it make more sense to the United States to pay Iowa farmers who will shop in the local malls than it does to pay a Saudi despot to squander his billions in Monaco and Switzerland? I'd rather send my money to Iowa than I would like to send it to Saudi Arabia.
Do too, but then you got decreased supply of corn, which leads to, you know what happened there. You got to wonder. But Ned, got to go. Just give us your websites, where to find you, where to subscribe.
Oh, it's been a pleasure to visit. My ag website is agravalueview.com. My gold site is valueviewgoldreport.com. And as always, it's been a pleasure.
Hey, likewise, and just go over to financialsurvivalnetwork.com, click the link, and you'll get right to Ned's sites. Ned, thanks so much. Talk to you soon.
All right. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.